Other factors when looking at ICO is to look at some of the what I call the small print, the minutiae, in terms of the way the actual business is being structured. So very often you'll actually see the management, the founders of the actual company, maybe they're actually having too much of the tokens themselves, and maybe they're actually holding on to too greater amount of capital compared to the token holders being distributed. Now, if I give you an example of this, you've got Ripple, who have been a tremendously successful business. They still haven't issued over 70% of the tokens that are available. And they've held on to them. Now, with the benefit of hindsight, you've seen the price of the tokens go up substantially, so they can now issue the price at a much, much higher level. So that's great for the Ripple ecosystem, because it means they can raise money, i.e. issue less tokens, but raise a lot more money. But on the whole, it's not something you would really want to see. The tokens are issued, there's not going to be more tokens issued at a later stage. And the management, the advisors, the people involved in it, do they have some sort of retention? Do they have some sort of lock-in? Or do you find once the ICO is complete and the tokens are trading, suddenly the directors can offload all of their tokens onto the market, so they then convert the tokens into cash, and they've got no incentive to stay involved and be involved in that business on an ongoing basis, because effectively they've cashed in their chips. So you want to look at, are there any retention periods? Another thing is that some of these companies generate a tremendous amount of interest on different things like WhatsApp group, on Slack groups, on GitHub, on Telegram. So these are social media platforms which are tremendously valuable, because what happens, you can actually put up what you're doing and how you're doing it, and then you've got anyone in the world can come in and say, but what about this? Have you considered that? And they're a very, very good way for companies to learn and almost stress test their business model, because they're opening up their concept and their idea to a very, very wide audience. So that can be a really, really good thing. But what we often find is that people are actually putting information out about their company. They're putting it onto a website. And whilst, let's say we're a UK-based company and we're really going to focus on raising money, let's just say in the UK, if you're not careful, because you're looking and promoting, you could get caught by regulations in the UK, and you could attract investors overseas where perhaps they're not allowed to buy your tokens. So that's something you just need to be careful of, in terms of you suddenly find a company that you think is really, really good, but they actually end up selling into China. It's illegal to buy it in China. Or they're selling it into America to, Mr. and Mrs. Jones, in the high street in America, who aren't sophisticated accredited investors. Well, the directors then disappear off to America on holiday and potentially don't come back, because the Americans say, I'm sorry, but you've broken the rules. You've actually been selling to US citizens, and you're not allowed to do that without the appropriate regulations. So again, these are little things, a little bit more technical now, but you need to be sure that the company is conducting itself in the correct way. And one of the best ways that they can safeguard themselves is to actually make sure that they have professional, proper legal advisors. So who has actually looked at the cash flow, the balance sheet? Who's actually looked at the sensitivity analysis? So to put that into very simplistic terms, if the business does really, really well, then the chances are it's going to run out of cash. It may be very profitable, but it could run out of cash. So what happens in that scenario? Or if the business does very poorly, i.e. the sensitivity in terms of doing well and really badly, how is the company going to cope? And if it doubles or triples, well, that may be fine. But if it goes up tenfold, well, that may not be fine, because they effectively run out of cash, as I say, and create a situation whereby it could again undermine the value of the business. So you want to make sure that the business has had a financial review. The second thing you definitely want to make sure is that a decent firm of lawyers with some sort of global reach, so that they have an understanding of regulations, not just in the country that you're going to focus on, but at other countries, to make sure that the directors are being given correct advice, so that if they do raise money and they are getting involved in other jurisdictions, that the appropriate risk warnings have been carried out. So always be a little bit cautious if you don't see a proper firm of lawyers being associated with an issue. Unfortunately, over the last year, that hasn't been the case. So many, many white papers are now there, out in the public arena, and it's the only public documentation. So what happens is that the share price, token price, is up here, and you've actually paid down here. So you've got no economic loss. You've made money. But had you actually bought into tokens, let's say on Thanksgiving back in November, when 250,000 people opened up an account to actually buy cryptocurrencies. Because they were sitting around, they'd had their apple pie and turkey and thought, right, okay, what am I going to do now? Watch TV, play some video games. No, I'm going to buy some cryptocurrency and perhaps pay for all my Christmas shopping, in a month's or so time. So you saw 250,000 people come in at round about the top of the market. No surprise, that's what always happens. So now you've seen I've paid a price for my cryptocurrency. The cryptocurrency is down here. I now have an economic loss. The only public documentation that you could rely on as the investor was this thing called a white paper. And if the white paper was full of errors and omissions and claims and statements, then what you're seeing is a number of pro bono lawyers. I'm a lawyer and I will represent you on the basis that if you win, I take a percentage of the actual legal compensation. And because you've lost money, now you've got economic loss and you can sue for it. So we are beginning to see legal firms actually saying, yes, we are interested in being involved in helping the creation of the white papers, but we're also seeing the litigation departments of some of the legal firms literally rubbing their hands and saying, this is just obvious. They've made statements, they've missed out things. The only public information that's out there in the public domain is this thing called a white paper. So little just words of caution to bear in mind if you're looking to buy cryptocurrency, even if it is currently on the market. How safe and secure is the rules and regulations, and have they adhered to some of these things that you need to look out for?